Many think we've got a 10-year bull market, and on fundamentals, I would agree with that. The reason I am one of the lone wolves that we only have a few years is because I'm pretty well convinced that we are going to see a new monetary system in short order. And that when that takes place, I think all bets are off. We don't know what gold and silver are going to do, especially if gold becomes part of the new monetary central bank digital currency or something along those lines, where we have a new system based on basically a cashless society with social credit scores and a bank account that you have to opt into.
You're watching CapitalCosm. My name is Danny. It is November 24th, 2025, and my guest today is David Morgan. David, thank you so much for coming on the show, my friend.
Danny, it's good to be back. Thanks.
Yeah, and quick note, guys, I'd like to mention that the episode today is sponsored by our good friends at the forecaster.biz. We do have a special 10% off discount when you use the promo code down below, CapitalCosm10, as well as the link in the description box or the pinned comment. So with that said, let's go ahead and dive right in here, David. I'm gonna pull up a chart of gold, and this is using the Forecaster Biz tool. We're currently sitting at 4,091 as of yesterday on November 23rd. And you can kind of see how this thing's moved. We've pretty much been moving sideways over the last month or so. No real gargantuan price action. From a 6-month point of view, you can see this massive move up from August all the way out until mid-October. And then from a year-to-date view, we're up 53.94%. And from 3 years' time, 133%. So I've got to ask, simple question, but what's your overall take right now on the gold trade? Is it we're rallying to the well, not rallying, but we're moving sideways now. But what does this portend?
Yeah, I call it a high level consolidation. High level because we had such a drastic move up, and it's making a channel formation. So if you go from that top peak and discard that, and you go to the second littler peak and kind of discard that, and you go from right under that peak and just draw a line on the top of those tops and the bottom of those bottoms, that's called a channel formation. And the channel formation is one of the easiest ones to trade. If it breaks up through the channel formation, you go long. And if it breaks down through the bottom of the channel formation, you short. And that's how you trade that type of a formation. Again, very simple. I use what I call the Morgan rule, which is it breaks through the horizontal channel. It's got to do it 3 days in a row, and it's got to be above average volume. Low volume doesn't tell you much. Big volume does. So I'm happy that's going sideways because it's building another base at a high level around the 4,000 level, and more people are basically even. In other words, the bulls aren't winning and the bears aren't winning. They're kind of neutral. It's staying in a very small area between a couple hundred, $300 move up and down. So they're basically evenly matched. At some point, they won't be evenly matched. The bulls will win or the bears will win. I suspect the bulls will win and will move up from that channel formation, probably up to a new high. Not immediately. I mean, all markets move up and down, but we'll probably be looking toward the $5,000 level sometime in 2026.
Interesting. Let's go ahead and take a look at some of our overbought, oversold indicators. Right now, it appears we're in neutral territory according to these tools here.
Yes. Just what I said, not to interrupt, but bulls and bears are basically even Steven, and that's why it's neutral, as I just said, just to kind of reaffirm what you're saying, Danny. Sorry, back to you.
Yeah. I mean, we also have this what's called the market mood meter, and this basically kind of tracks FOMO and I guess FUD, fear and greed. Whenever it's at the top here, you see we were in pretty extreme territory of FOMO back in mid-October, and of course, sentiment is now about neutral, just like you said. So, I mean, you and I didn't go over these charts beforehand, so it's interesting that you've been able to nail the narrative that I've been able to kind of gather as well. We also have this AI tool that they have. So it's called it's the Forecaster AI agent. We can kind of go through some of the high level takes that AI has on some of the price action. And as they're looking at resistance between 4,095 and 4,100 at this moment in time. And overall, it seems like the conclusion is there's underlying demand in gold remains robust, continuous monitoring of economic indicators, blah, 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 and geopolitical development. So essentially, there's really a stalemate between the bulls and the bears. With that said, let's go ahead and turn on over to silver. I want to get your thoughts on silver, unless there's anything else you'd like to add on gold before we transition.
Nope, I'm good.
Yeah, so let's take a look at silver. Silver's a little bit more interesting. This is a 6-month view silver. Dave, is this a double top I'm looking at here?
Could be. I doubt it. I mean, very difficult to say. I mean, does it look like a double top? Yes, it does. Is it a double top? Maybe. I don't think so. Basis gold, what we just showed. So if you look, you can go back to gold. I wouldn't, but it's up to you. The peak in gold on the left side was much higher than the peak on gold on the right side. But in silver, they're matched. So they almost are identical.
Yeah,
So
so here's
gold is
gold.
actually telling us ahead of time that it needs to consolidate, it needs to take a breather. While silver was ready to challenge the all-time nominal high one more time and it failed, but that doesn't mean it's not going to consolidate like gold, which I believe it will. And silver is starting to outperform gold on the gold silver ratio. I mean, it wasn't that long ago we were over 100. Now we're in the 80s, which is not historically is still very high for the gold silver ratio, meaning silver is really not caught up and outperformed gold as much as I think it will in the future, but it's doing its job and it will, I think, continue to perform or outperform gold over the next series of months and years. I really am kind of a lone cowboy in the thought process that we have a 2-year market, 3 maybe at the most. Many think we've got a 10-year bull market, and on fundamentals, I would agree with that. The reason I am one of the lone wolves that we only have a few years is because I'm pretty well convinced that we are going to see a new monetary system in short order. And that when that takes place, I think all bets are off. We don't know what gold and silver are going to do, especially if gold becomes part of the new monetary central bank digital currency or something along those lines, where we have a new system based on basically cashless society with social credit scores and a bank account that you have to opt into.
Yeah, so you're saying that silver could top out within a few years. Is
Yeah.
that correct?
Yeah. No, yeah. And again, I reserve the right to be wrong. I mean,
Mm,
I've certainly not made perfect calls, but I'll put my record against
mm.
anyone's, especially calling the tops. I've got them all so far, the major tops. But the acceleration phase is the greed, panic, FOMO. And you get those big accelerations like you saw in 1980 and 2011. We're going to see that again. And I think, again, it could be as close as a year and a half away. And you see silver go from $60 in November and $120 in February the next year. So in a 4-month time frame, it like doubles or something. You get those kind of moves, you got to be really careful about getting out. But we're not there yet. Now, if we're in a 10-year bull market, and I can't rule it out, I don't know the future. It would be more of a steady eddy kind of build and base, build and base, build and base, and the fundamentals get put into the price action. But I don't think we have that kind of a market. We've got a very emotional market. We got a very fear-driven market that's going to increase in fear because of non-trust of government currencies worldwide and untrust of the political class, generally speaking, the war efforts, and what's going on basically in the budget deficit that everyone is now acknowledging in the financial arena in the public way, where basically we've seen Moody's downgrade the U.S. Treasury market from AA, little a. In other words, they've downgraded it slightly. And anyone that knows anything about math knows that this federal deficit cannot be unwound. The only way to really do it is by a reset of some type. And there are several ideas about how that might occur.
So I'm looking at the long-term historical view of silver here right in front of us. And you can't see it here on this chart in particular, but we did form this cup and handle pattern stretching all the way back to 1980. And I mean, wouldn't that imply that the move in silver would be a lot more extended out than a few years? I'm sorry, I'm harping. I'm being kind of sticky when it comes to that point, but I'm just really trying to understand
Sure.
like the
No,
gravity of
I
what's going
love
on.
it. I mean, I like being pushed back. I mean, I'm not an objectivist like Ayn Rand, but I certainly adhere to some of her philosophy. And one of it is check your premises. Before you throw a rock at somebody, make sure you're on solid ground, and maybe something changed in your data set or your knowledge or your belief or whatever. I'm basing it on basically, being a student of the markets pretty much from the time I was a 16-year-old kid. That's a bit of a lie, but that's when I started trading stocks. I was that young, and I really got serious about it in my 20s. So, I got like 50 years if you want to add it up. But the point is that if you believe in more or less the Elliott wave theory, and I'm not an Elliott wave guy, but there's 5 waves. There's 3 up and 2 down. So you got a wave up, and then a correction wave, another wave up, and a correction wave, and then the last wave, the 5th wave, is the maximum in price appreciation and the minimum in time duration. And that's where that adage that I got really from Jeff Christian of the CPM group, that 90% of the move comes in the last 10% of the time. That's the FOMO, fear panic phase. And it's not just the metals. And that's what gives me more solidity to push and build my case. It happened in the stock market during the tech wreck of 2000, happened in the housing market in 2008 and 9. It's happened in commodities across the board. And so I expect it to exhibit what I would call standard market behavior, that markets accelerate at the end. And you can actually project what it's going to do. If you take the third wave, third wave up, as after the crash, it went down to 9 and up to 45. So it was a 5x. Usually the last leg up, the one we're talking about, and how long is it going to last, is double that. So if it was a 5x, you do a 10x. Well, what was the bottom of the last wave? And that was during the illness scare in March of 2020, and it hit about 12. So if you multiply that by 10, you get $120 silver. Do those numbers work out perfectly? No, don't hold me to them, but a general idea. So I'm sticking to it, Danny, until proven otherwise. And I'm very good at eating a bit of crow if I need to, but I'd rather be uh, prepared for,
Right.
let's say, my own thinking rather than going along with the herd and saying, oh, the consensus is this and therefore it's that. I'm not going to do that. I never have, and I probably never.
Right. Well, I appreciate the projection. We also have a projection tool here we can look at as well. This is leveraging AI to determine a bull scenario here in green. It's looking at a bull scenario of $77 silver, around mid-January, and a bear scenario of $40 silver around the same time as well. So pretty interesting tool we've got here, guys. And then we also have overbought, oversold indicators, and similar story to gold. We were in extreme overbought territory, extreme FOMO. Now we've kind of leveled off and things have kind of cooled off. So I want to get your thoughts here too, guys. I mean, feel free to chime in the comments what you think lays ahead for silver. Are you more so in line with the bull scenario here or the bear scenario here, or maybe something neutral, kind of in the middle or so, moving sideways? So
Danny, if
anything
I
else
could
you
just
like?
add to that a little bit, there are seasonalities to the commodities. They
Mm-hmm.
don't hold 100% of the time, but there's seasons where you want to trade wheat long or short. There's seasons where The cattle market does certain things. That, again, it's not a given, but it is a help. And the seasonality for the metals, especially the other white meat. I'm trying to be funny here. The platinum, palladium. You
Hmm.
can almost always make money trading on the long side for the PGMs. I don't know why. I think perhaps the manufacturers buy in January just as a matter of habit. I don't know. But the feed for gold and silver historically has been strong in the January, February. So that would suggest that the bull case is more likely than the bear case you just showed.
Interesting. Yeah, we've got seasonality here. This is the blue line is the 5-year seasonality, and the red line is the price action today. So we're in late November. Typically, we are not. We've moved up significantly higher than we have in the last 5 years on average, which makes sense. I mean, this is a breakout that we're seeing, but we are significantly higher. We can also look at let's look at 30-year seasonality. We're also above that. We can look at every type of seasonality out there: 30, 50, 30, 15, 10, 7, last year, this year, 3 years ago, and in each case, we are above that. So one can say maybe we are a little overstretched and we need to calm down, but it's really a confluence of evidence that we have to look at here, Dave. One piece of evidence is not enough to make a conclusion, but rather it's the overall picture um, that
Couldn't
we're
have said
seeing
it
here.
better, but I also push back on you a bit. I don't push back the
Sure.
right word. It also could be indicating what I said, that we're in that acceleration phase.
Yeah, that's
That's
true.
not going to last long. Look at how far above the average it is. Like, wait a minute. Well, Mr. Morgan's correct that we're in the 90% of the move. It comes in the last 10% of the time.
Hmm.
Get ready to pull the trigger. I don't want to sell my metal for fiat, but if I could sell it for a house that's dropped 50% because the commercial real estate market is in a horrible state in 2026, and silver peaks at say the 120 I just indicated. I got to take a look at all of this stuff, and it's very difficult. The hardest thing for me is to try to get close to a top for our members, and obviously I'm going to do my best to do that. Anyway, I'm not saying you're right and I'm wrong. You know me very well, but it also could be looked at it from a different perspective.
Right.
Well, it is way out of whack with the historic standard, but if we are in that last phase, it could, not would, explain it.
No, I mean, that's a very good point. The fact that this red line is significantly head and shoulders above everything else, I mean, that could be a telltale sign there's something weird going on, that this is something novel that we're witnessing right here, like you're pointing out. And on top of that, if you look at all these other lines, they seem to start moving up, starting in January all the way up until the end of spring or so, or April or so.
Those
It's
are the
moving.
older ones. Those are more historic. Like I
Mm,
said, I got 50 years experience does pay if you keep trying to get better and better. And if you go down to the earlier ones, they don't work out as well because
mhm.
we have had the last day of trading as the lowest print in gold several times during this last bull market, and that was like very counterintuitive to what historically takes place on a seasonality. So the black line, the big one, the digestion of many many years, is the most accurate for my lifetime. That's what I've witnessed over all
Mm,
those years. But if you go again, shorter duration, yeah, it's kind of like flat if you look at the bottom one. Anyway,
yeah.
I'm just trying to make good judgments with these tools. I don't overuse them. They have their place, but you got to use your own brain as well.
Yep. Couldn't have said it better myself. Let's go ahead and take a look at the mining stocks. Here's GDX. GDX has also made a similar pattern to the other, the other two metals. The mining stocks are pretty much moving in tandem, it would appear, with gold, although it's tracking gold to at about a 2x multiple. It's up
Yeah.
116% this year. Gold's up 50% or so, and it's similar, made a similar pattern too. So it's made not this double top, but it's kind of moving in this little channel that it's built. Do you have a similar take on the miners as well, or?
Yeah, it's funny. I just did my weekly perspective. I did it on Saturday this weekend. Which exact word you said. Usually on a really strong market, you get a 3x on the stocks versus the bullion. But right now we're at a 2x, and that's what I said. Also, there's a case to be made by mostly the bullion dealers. Well, don't buy the mining stocks. They underperform the bullion. Well, that's not true because that's based on the HUI and the XAU. So the miners are outperforming. And I think there's reasons to own the miners as well. And that is the people that are worried about confiscation. If you have mining shares, those aren't going to be confiscated.
Hmm.
The other thing is you do get leverage. And also you have the ability to write options on them, which is a nice income source backed by gold, which many people don't know about or don't teach, which I do. So I think it's good to have a balance. And in the How to Use the Morgan Report, when you become a premium member, I outline guidance. And guidance is the older you are, the more you should probably favor physical over the equity. The younger you are, the more you can take the risk of the equity side. But I think a balanced portfolio actually has them both. And you can get some real winners, especially in the junior sector. I mean, you look at someone that specializes in that arena, like Don Durrett. I mean, there's you can really bang them out if in the right market. And when you get a really strong bull market, you're going to see anything with gold and silver in its name move up. We're not there yet in my analysis, but we will probably get to that point in the, I think, not too distant future.
Yeah, well, I mean, have you heard the news? I mean, Tucker Carlson is starting his own gold bullion company. So you've got some pretty big names getting in on the action.
You'll see more and more of it. I mean, at the end of the age of empire, and when the big empire starts to fail more and more, which the United States is, and what I like to call the Anglo-American Empire, because it's really the Brits and the Americans, with London being really the financial center more so than New York, believe it or not. And that Anglo-American Empire I mean, it's winding down. China is the new financial empire. You see what's going on with the amount of gold that China's imported. You use the adage that's corny but true: he who owns the gold makes the rules. China owns most of the gold, they're making the rules. You're seeing, well, what have they done? They've done a beta test for the world on the new monetary system. They already have a phone system that you use with WeChat or Tencent, and everything that you do in the 400 million in the cities, you can't use cash. Everything's done by the phone. Well, that's the world system that's been done in China for a few years, and it's based on a social credit score and how well you obey the rules that are come from on high, and that's what we're pushed into. That's the idea that the banking elite want. These are internationalists. They have no propensity to be aligned with any given philosophy politically. All they think about is money and control. And so it's right in front of our eyes if you take a look.
And China appears to be the model that the West is aiming to base what they're doing here as well. Because the AI race really comes down to data collection. You can have the best data scientists and engineers building out your AI models, but if you don't have enough data, if your competitor has access to a wider swath of data, then your competitor is always going to be at an advantage. So here in America and in the West, they've got a lot of catching up to do, and it seems like that's what they're doing in trying to, what they did earlier this year with I believe it's Palantir, when they kind of consolidated all the departments in the federal government into one data warehouse or data lake or something like that, effectively, joining these disparate data sources into one unified source. So, the Department of Treasury can get access to your health records if they wanted to, or vice versa, and things like that.
Exactly. And then if you've noticed, you probably have, we're a little in the weeds, but I hope we can stay here a bit, that some of these sites that were taken down are now lifted and they're back on X and YouTube. And there's a
Mm.
reason for that. So some of these more, let's call them quote unquote conspiratorial websites, for lack of a better term, are allowed to come back. And why is that? And the big why, and this is intent, do I know for sure? No, but my highly intuitive self says they want that data because they want to know how far we're going to push back on this new system and what our vulnerabilities are. So there may be one for, well, that's, I mean, I won't go too far in the weeds, but they want that data because that gives them an advantage, or at least enough data to, find out who's who in the zoo, who we don't like, and who's going to have, something given to them that they have, like an ultimatum, perhaps, that either get re-educated by the re-education camp, or you lose your sight, or you fill in the blank. I don't want to be too negative here, but look, this AI thing is like most technology. There's good and there's bad. And how is it going to be used? How is it going to be implemented? Certainly, it can be used for a lot of really, really good. Conversely, when everybody's spied on 24/7, and then you're monitored with that level, and there are edicts that are not free market, that it's determined how many calories you can burn, how far you can drive, when you can fly, what size apartment you can have, what type of education you get, whether it's public or private. And all that's determined by, let's say, a credit score, carbon footprint, or a social credit. You are in a dystopian nightmare under the most unbelievable Orwellian system. I mean, when George Orwell wrote 1984, it was a dystopian future that was very bleak. And yet, what I see is more of a Brave New World, uh, Aldous Huxley's type of vision, where we are so glued to our black screen and so entertained that we don't even notice the real world around us.
Yeah, we're pacified. And to kind of uh, bolster your point, it's not just your intuition that's telling you this, but it's also history. They did something similar in China back during the Cultural Revolution. It's called the 1000 Blossoms campaign, and they basically encouraged everyone to speak up. If you have any problems with the way we do things, we want to hear your voice. Well, they let everyone speak up, but then a few years later, they were able to identify all the possible dissidents, and then they rounded everyone up, and that was that. And so, I think I'm not saying that's going to be the case here, clearly, but not everything can be linked in, right? Like if they want to make their AI models as accurate to reality as possible, it's not going to happen if everyone's self-censoring themselves. You go to LinkedIn, it's all extra clean, extremely sanitized. Everyone's extremely fake and trying to, so like if you have something like that, you're not going to capture human nature properly. So they have to, I guess, if they really wanted to do it right, they would have to encourage people to speak their mind, what's really on their mind, what's really on their heart. Now, is it because of that? Will they be successful in building out their models and to the extent they want? We'll just have to wait and see. But nothing comes out of good-hearted charity from the folks at the top of the pyramid here, because you've got to realize to make it to the top of the pyramid, you've got to do some unsavory things. I know I'm not talking about like some Illuminati stuff. I'm just talking about like being cutthroat, ruthless to other people, stepping on other people, over other people. So, I mean, these people are not necessarily our friends in either party.
Oh, I agree. And cooperation is key, and yet it's very difficult in our current society, and how much it's been distorted from the founding principles. And there's some of that alive and spirited in people like you and I, that really, I think, understand that the most important thing on this whole mess is freedom. If you don't have freedom, then it doesn't matter how many gold coins you've collected. Like I said, if you got a social credit score that's not as positive as it should be, to go to a fancy restaurant because your carbon footprint's too high, what kind of freedom do you have?
Yeah, totally. Well, Dave, I mean, we've covered gold and silver. We've covered the uh, this dystopia in progress, you could call it, I guess, whatever it is. What's your view? Before we sign off, I want to get your view on the overall market. You've got these rate cuts they keep talking about, whether they do anything or not to the long yield, the long end of the yield. in the debt markets still remains to be seen. You recall last year they cut rates. What was it, 100 basis points? 10-year yield didn't budge. Now they want to cut rates some more. We're still not seeing the 10-year budge. And you're seeing some worrying indicators as well when it comes to the stock market. But you're also seeing some indicators that point us in the other direction too. Short selling is at a record high right now. That could be a sign of a local bottom, I guess. But I just want to get your sense of where you see the markets right now.
Well, we're really having almost mental telepathy today, Danny. That's my editorial for this month. I'm talking about the rate cuts and why they won't work in my view. Just as you outlined, you can go ahead and set the discount window at a certain rate, or what's called the federal funds rate, and try to push interest rates down. And you can control that one, but you can't control the market. The market says, I don't trust the U.S. debt anymore. And to be a sucker in your game, you've got to push interest rates higher for me to take on this risk. And so you've got two opposing forces. One that says force interest rates down and let's get the credit markets opened up so people have lower house payments, lower car payments. They want to buy things on time and stimulate a credit-based economy or a debt-based economy. Same coin, different sides. I don't think it's going to work. That's my editorial, that the Fed is at a point of becoming more and more powerless. The power of the market is taking precedence. And because of that, we're going to see more and more distortions. I mean, look at what's happened with Japan and the carry trade. I mean, Japan interest rates have moved up, and they have, for the first time in a while, as far as significantly impacting people's thinking about what do we do, because there's so many derivatives. I mean, I'm not a big fan of Buffett's, but I'm not against anyone. But when he said that derivatives are an object of financial mass destruction or something along those lines, I probably misquoted him, but the idea of the financial mass destruction is absolutely correct. I mean, the flea on the tail of the dog is wagging the market as a metaphor. And that's a problem, a big problem. So you've got counterparty risk bank to bank. And we've already seen it in 2008. These banks, some are too big to fail and some are really big and do fail. Mm-hmm. And in a systemic risk where you've got nation states playing with the U.S. bond market, and maybe selling more than the Fed could buy. I couldn't say they could sell more than the Fed could buy, but let me say it, they could sell more than the Fed could buy efficiently. In other words, there's such a huge sale, like sell everything, like in the movie Rollover. Certainly the Fed could mitigate it, but the game would be over in a way, because what it would say is we've given up on the US dollar. Now that, in my view, will, I won't say never happen, highly, highly unlikely. But we could get a system where the AI starts to sell off and it's more than normal. And then another bank jumps in and does the same thing. And all of a sudden you have a cascading effect that wasn't planned. It just happened due to the algorithms.
Yeah. Well, it seems like everything's riding on this little circle, like human centipede type of thing that we have with Oracle, OpenAI, where they're just basically giving money back and forth to each other. Mm-hmm. And, it's not even the Mac 7 anymore. It's really like the Mac 2 or 3. And it's becoming more and more dire that they're able to secure and procure all of these minerals and resources that need to power their data centers. Because you recall back in like 2021, 2020, the green energy stuff was a big deal. Now they've kind of done away with it ever since ChatGPT came on the scene around 2022, 2023. And my thing is that they just decided that, what, F this, just dump everything into AI. Like forget about, windmills and solar panels. If we got to pump coal into this thing, we're going to pump coal into this thing. Yeah. So,
yeah, well, as Einstein purportedly said, he dreaded the day when technology exceeded our humanity. And I believe we've crossed that threshold a long time ago. And hopefully we'll get our common sense back, because again, nothing's really wrong with technology, but it's got to be balanced within the human experience. And really, right, it's going to leave a lot of people behind. And that's unfortunate.
Well, Dave, it's been a pleasure, my friend. Anything else you want to talk about, bring up, shout out before we
Just a
move on?
reminder that my documentary's out, the silversunrise.tv. Just view it, comment, send it on. It takes a spiritual side of the money problem and how we should be more self-reliant or more of a cooperative community wherever we live. That we're more alike than we are different. It's the powers at the top that want to divide and conquer. They want to point out all of our differences and why you think left or right. And they're actually programming us a lot
Mhm.
to, the feeds I get on YouTube are because of my previous channels I looked at. So they feed me more of the same and keep me in an echo chamber. I have from the beginning tried really diligently to look left and right because there's merits on every human. Everybody's got something to teach you, even if it's what to not to do. You're learning from them. So I want to take a broad-based view and get the whole picture, not to be a centrist because I'm not, but to be as well informed as possible. Because in an echo chamber and kept self-feeding the same side of the equation, it only divides you from all our brothers and sisters. And really, it's time for us to come together. It's not time to divide.
Yeah, there's definitely more in common that we have with others than we do with the red team or the blue team that's at the top of the hierarchy. So excellent chat as always, Dave, my friend. Where can people find you if they want to see more of your work?
Yeah, best place is our landing page, themorganreport.com. Scroll down the bottom and get on our free email list. And there's icons at the bottom. You can connect to the X, you can connect to LinkedIn, you can connect to YouTube channels. We have all of those, but main landing page is probably your best. And if you just want to go through the interviews I do during the week, just hit the blog tab and they'll pop right up for you. You don't have to search, they're right there in your face.
Awesome. Well, we'll have the link to your website and your socials down below. So check them out, guys. And if you got value out of this podcast, drop us a like and comment. Go, Dave, go in the comments section. And by liking, subscribing, commenting, doing all the YouTube stuff, you do help us in getting this message, this video, and this channel pushed in the algorithm. So a little bit does go a long way. And then, of course, be sure to check out our good partners at the forecaster.biz. If you liked the tools that we worked with today, we have a special discount code for you below. It's CapitalCosm 10. And by using that promo code along with the special link down below, you'll get access to all the stuff we looked at today and much, much more. This is only the tip of the iceberg, let's say. So I appreciate your time, guys, and I will catch you later. Have a good one and happy Thanksgiving. Bye.